Hello everyone. Thank you for tuning in. Today I am Varnika Goyal, Financial and Services Analyst with Twimbit, along with Siddhant, Developer Solutions Lead at Zwitch. Thank you, Siddhant, for having me today here. I'm super stoked to talk about this interesting topic, demystifying the world of embedded finance. And I'm extremely happy that things like finance can now be embedded into our lives. So, to just give a little bit of context and a brief about what we're going to be talking is I want to start by introducing that today we're living in the era where customer behavior and demands change like moods in the day. And it has become extremely challenging for companies, banks, or any industry for that matter, which is customer facing, to actually sustain in the market. And one of the biggest impacts where I see this happening is in the banking and financial services industry, especially when India saw the boom, or I would say the doom of demonetization, and then we saw the deregulation in the market, and then we saw a lot of platform driven companies entering in India. There has been a lot of storm and change, and which has actually become a catalyst for the customers to think about innovation, think about how they can do a click and get through their transactions. If they want it to become as easy and as accessible at any given hour of the day, that they have now started becoming the kings to the market rather than being from thinking about a product and then making a decision. It's all there out there for them. And what I feel is that fundamentally we're shifting the focus from product centricity to customer centricity. So now we're thinking about customer experience every day. And we're thinking about how we can be a part of consumers' life, how we can change their journey and actually preempt their decisions. Therefore, bring in products that actually are not needed at the hour, but are going to make their future lives easier. So, with that concept, we're coming with something called as embedded finance. And when we say embedded finance, we mean that when at any point in junction of my life, so whether I'm in getting myself introduced to banking, I'm starting my college, or I'm moving to a post college life, or I'm moving to a state where I'm getting married, I'm planning my family, or later on, if I go ahead and think about buying a house, buying a car, and finally, in terms of retirement, finance needs to be a part of each of these journeys. And it needs to help me make a right informed decision rather than me going to the bank and going to any financial institution or merchant that, hey, I need this product to fulfill this goal. whereas they need to tell me, you have this goal upcoming, why don't we service that for you? So therefore it is becoming ubiquitous, it is becoming a pivotal role in our life, where the per capita consumption today of a consumer would be consuming one or two financial services. It will actually move about, in the perfect world of embedded finance, that we're consuming about 15 to 20 services, and all through various platforms. We don't need a single platform to actually service that. So with that, I would like to open up this question to you, Siddhant. What do you feel? What is your perspective of embedded finance?
Well, thank you, Vanika, first of all, for letting me speak on embedded finance. It's a buzzword. I'm really excited to talk about embedded finance to everyone today, and it's a very wonderful introduction about the ecosystem as a whole. For me, embedded finance is the opportunity for every company to become a fintech company. Uh, so if I talk about some stats, like with a forecast of over $7.2 trillion in revenue, uh, is what we are expecting to happen by 2030. Embedded finance is going to redefine the essence of the financial services industry. Well, this number is roughly double the market value of the world's top 30 banks today. It has transformed the whole financial services distribution model. But these are just on the starts part. I'm sure like not many people who are joining us today might not be even aware of what is embedded finance. Like if we can like kind of break it in a very simpler terms. So what I'm gonna do is just take a quick example and talk about what is embedded finance in a very easy example that could be understood by everyone. So all right, so let's understand this example. So assume that you have a craving for McAloo Tikki burger from McDonald's, right? So what are you gonna do? You have three options. You can go to the nearest McD outlet. You can order it on a McD app or on a food delivery app, right? These are the three options that are available for you. Order it on a Zomato, Swiggy, or any other food delivery app. Now, each of these models has its own pros and cons. Uh, for one where the real estate cost is a very high, and versus there's a high customer acquisition as well. Versus a model where you can connect to more customers via an app-based platform, which McD is providing on its own. But
Right.
then McD has to put in additional efforts for its own delivery fleet and stuff. So, but what we are most interested in over here is the third one, the burgers of McD. Its quality, quantity, everything is kind of taken care by McDonald's. But the distribution and customer acquisition belongs to the food delivery app. So
Right.
just remember this point. From a customer point of view, the customer wants a McD burger and gets one. Simple. And from the McDonald's point of view, they have the burgers that needs to be fed to the hungry customers. And folks, that is what BAS all about. Burger as a service. Well, I'll come back to banking as a service. This is burger as a service. This is getting delivered to you at your doorstep without too much of a hassle by McD itself. Like they don't have to spend too much on a real estate cost. They don't have to open up not many stores, retail outlets. They can just use a food delivery aggregator or a delivery app to kind of provision those burgers to you. Okay. So here are some of the standard banking products and services that you might be familiar with. And I'm kind of relating the previous example with this example now. So these are the banking products like savings accounts, current accounts, your recurring deposits, your fixed deposits, your virtual accounts, your lending and stuff. Now, for long, branches have been the main touch point for banks. Banks, the branches have been the place for sales, the customer engagement, the cross selling, and everything related to customers. Branches drive linear growth, so it increases growth. Like the bank has to add more branches if they want to increase their growth. That means additional costs related to real estate operations and resources. This is very much similar to the McD's outlet model that we were referring to in the first place, right?
True.
Now, with the penetration of internet, even banks adopted an app-based strategy wherein banks' websites or an app allowed consumers to engage with the banks the way it was working in the McDonald's app model,
Right.
right? So the above two models that we just discussed right now, these are very straightforward. But
Right.
Is it possible to replicate the third model that we were referring to in McDonald's case? Is there a possibility where third parties can sell banking products?
Right.
So yes, that is what banking as a service is about, where banking products are sold to customers via third parties who can manage customer acquisition and distribution, but the bank will control the product. So ultimately, it's the bank who's controlling the product. It's the third parties or aggregators who are kind of provisioning it to their customers. And its attributes includes like governance, compliance, and everything. That's something which the third parties are taking care of. So any
Yes.
entity that is interested in extended a bank's products or services to its customers, SMBs, corporates, or retail customers, partners like delivery personals or vendors, like a sellers or restaurants. So anyone can use these bank services via these third parties. And some of the user suspects that are kind of helping you provision that financial services which are provided usually by the traditional banks are like the payment aggregators, your neobanks, your merchants, your API platform or technology service providers, TSPs as we call them. But you might be wondering, like, banks could do on their own. Why there's a need of a third party to do all this, right?
True.
So well, traditional banks are rigged with multiple issues such as legacy ID infrastructure, one size fits all experience, which prevents them to provide the experience that we can think of customized for each category of users. Like gig economy workers would need a different kind of an experience. They might not be aware or kind of equipped to understand the user experience a bank provides, or for women, or for a blue collared worker, or for a salaried professional. So and so forth. So there are like bunch of categories of users, and how can we provide a personalized experience to them? But all in all, this entire third parties and embedding financial services by them, it's a win-win situation for everyone who is involved: banks, consumers, and also these third parties, the merchants are providing. So
Right.
banks benefit by white labeling their services and earning on customers that they may not have otherwise got. So
True.
actually, the third parties are bringing more customers to bank. Otherwise, they would have to spread their wings and then go a lot into the market. But
Right.
that task is being taken care by the third party. But now for consumers, they benefit because they will get a more seamless and convenient experience with the merchant. So they will not need to stop whatever they are already doing, access financial services, and then go back to the merchant to complete their purchase. They can do it within the platform that's provided by the merchant, by the business itself. So whatever they sought to do with the merchant, instead of going to the net banking portal, they are provisioning all the services within the merchant portal itself. Now, from a merchant standpoint, who's providing all these financial services to their customers, they benefit because it builds a smooth stream of income for them. It costs a lot cheaper for them to build all of them, and
Right.
simultaneously it improves the conversion rate, customer experience as well. So,
Right.
if you notice, like everyone is getting benefited out of it. Banks are getting benefited, consumers are getting benefited, third parties or merchants who are using or embedding these financial services, they are also getting benefited out of it. So that's in a kind of in a nutshell about like uh, what the embedded finance looks like, how it's kind of cutting across various industry verticals.
Interesting. So now you made us everybody drool on a Saturday evening about burgers. So instead of having tea and samosa, we need some Coke and burgers, which are going to be serviced by Siddhant to all the audience that we have with us.
Definitely, definitely. But I have a
Lovely.
question for you.
Yes.
What do you think are some challenges or conservatism towards adopting an embedded finance approach? Like it's a $1 trillion industry, $7.2 trillion industry. But
Right.
why people are so reluctant? Why businesses are reluctant?
See, the reason why banks and financial institutions, we need to understand that they are very traditional in nature. They have just seen innovation happening. So, prior to 5 years or maybe 10 years maximum, the only innovation that happened in banking industry was an automated teller machine. Beyond that, we hadn't seen anything happening in the BFSI sector. But suddenly, uh, I think with this platformification, banking APIs, people understanding that open economy is something that we can derive from, there was like a storm of innovation, which did not change the mindset. The mindset was still conservative in the nature because it is a highly protected, regulated industry. And government from various geographies define how the industry is going to operate in the market. Whereas if you see the Asia Pacific environment and you'll see in the Indian market, our governments have still deregularized a lot initiatives for the banks to open up their environment. However, we still feel that even if the environment is open, it provides all the benefits. The banks feel that they are at the outset of losing their client relationships, which they were able to have a human touch involved, build personal relationships. That is being now serviced by third party platforms, and those relationships do not come back to the bank itself, even though the bank is controlling the environment, controlling the product at the end of the day, which eventually will move. Why? Because the consumer will drive that initiative. When the consumer asks that I need to consume products, irrespective of which platform services provisions it, the banks have to tend to that lane where the volumes will define that the necessity for the banks to change. So, and at the same time, banks, like you said in your presentation, that banks operate in heavy cost structures, and intervention by third parties actually reduces the distribution cost to a great extent. So, where in a traditional environment where we were actually spending about $10 to $12 per customer to service a product, today we can bring down that cost to about $1 to $2, and that's a huge margin that the banks can operate with. So that and the pandemic has also made banks realize the fact that their cost efficiency ratios took a major hit. For where they were operating between anything between 40% to 45, they were shooting above 45, and in some geographies it even reached to 60%. And the only reason why, because their revenue streams were restricted. The revenue streams are only restricted to what the product that the bank is selling at the moment from their own traditional distribution channels, and had not opened it up to various third parties. So that's where the conservatism lies, where you don't want to lose the end user, and service the journey and control the entire journey. However, I feel that if you play on low margins, high volume, at that level, and with bringing in low cost structures to service that, profitability becomes the driver for the banks to change that mindset.
Yeah, speaking of the volume and the expense which is required to build this entire infrastructure, which banks are building, then further third parties are consuming it.
Right.
Definitely, volume is a key to it. So, how do you think banks can reach that volume which is necessary to justify the expense that is required to build this entire infrastructure? Even for the merchants to kind of use these APIs, which are
Right.
provided by banks, the open banking APIs.
Yeah.
Like how do they justify it for their end user?
See, very interesting question, and it's very important for banks, merchants to understand that what revenue sharing models that they're entering into. So there needs to be a clear line of understanding that how these revenue sharing models support the growth, both for the bank as well as the merchant, right? And at the same time, there needs to be an ecosystem play involved, right? So I'm involving multiple third parties. I need to have an ecosystem strategy in place. I cannot be treating a particular third party and B particular third party at a different level. So, an integrated ecosystem strategy which has clear lines of revenue sharing models, which clearly define where the intervention from the bank and where the intervention from the third party is needed, and it defines your margins clearly. So, your margins cannot be things that actually overshoots your cost structures, right? So your margins cannot also be in the sense skewed to the sense that to gain that market share, to gain that customer base, you operate in a very low margin in the beginning, and then when you want to increase that to build your revenues, at that time you start feeling that you are losing customers, because customers today don't have a stickiness rate of what they had traditionally. So it's very easy for them that if you're not giving them the right price, they'll move on to
They'll
the
move.
next.
Yeah.
Yeah. So that is something that I think a lot of neobanks, when they came into the market, they thought that, giving low cost products, highly cheap, giving very very competitive interest rates will actually make them gain the customer. But it had a two-way effect. You will, when you wanted to increase it, because you were hitting the profitability margin very low, you couldn't, because number one, the customer was actually becoming dependent on those low prices, and the minute you increased it, the customer wanted to leave you and move on to the next player. And at the same time, when you were attracting funding and you had those pool or cushion of money to play with, that was burning out. So your burnout rate was much higher. So that's the reason a lot of banks, digital only banks, platforms, which came into play the earlier days, could not have a right strategy or an ecosystem, like an ecosystem, I would say, mindset, which was integrated and seamless across all third parties. At the same time, the customer as well, they were struggling to sustain themselves.
Got it. So it's more of like they're now trying to build that ecosystem which will help them reach to more audience, more customers, more users
Yeah.
for their products, their traditional products via these third parties.
Right. Keeping the price point aligned. So you need to make sure that your revenue sharing model is such that benefits both the parties, and at the same time your customer stays with you and stays happy. So the stickiness needs to be there, because if you don't have that stickiness, it is very easy to lose the customer base,
Got it.
especially when you have a market where every day there is a new player coming in and popping in, because the population size is so huge in India that even if you open up like 100 neobanks, you'll still feel that there is a gap, and I can service that particular small gap in that particular market, right?
Got
So
it.
that leaves me to a question. So this is from a business and a consumer standpoint. What do you feel that if we look at from your like stronghold, the developer side, how does that play out for the developers if you had to explain embedded finance or maybe the ecosystem market for them?
Right. So we know that traditionally financial services, such as like payments and lendings, were the exclusive purview of banks. We have been discussing that because banks
Right.
are highly regulated entities. Longest time, these institutions build their own custom tech stack.
Right.
Together, these realities made it practically impossible for banking services to leave the bank's stated walls. But
True.
then there was one game changer over there, which was APIs. So
Right.
basically, APIs allowed one system to communicate with each other to another system. It's simple to understand, implement, and manage by any developers, anyone from those third parties, any fintech developer. So essentially, what was happening is the open banking movement took, took place, which effectively broken down those barriers and made sure that banks can go out of their gated walls. So today, banks, fintechs, and other regulated entities can connect non-finance companies as well to their platform via APIs. So so basically, APIs are kind of the glue which is binding the banks and the fintechs, and of course consumers as well. So in turn, firms from practically every industry imaginable can now incorporate banking products um, embedded directly onto their own platforms. So just taking quick examples to give you an idea of what we're talking about. So an
Yeah.
e-commerce retailer adds a payment financing option at checkout. You might be seeing this a lot in the e-commerce platform these days. You have an EMI option these days, right? So that's an financial component added to your existing product, right? or an
Right.
e-wallet for a gig economy platform, which enables both consumers and providers to exchange money directly via the app. So they don't have to like share their bank details, go out of the platform, do transactions, and come back to the platform. Within the
Right.
platform, everything is done. Or a real estate platform offering renters insurance to new tenants. Like so, new
Right.
tenants comes in and insurance is being provided to them. So it's kind of like you are integrating or offering an additional landing product out of it or insurance product out of in your existing platform. So these are just couple of examples.
Right.
But what essentially is happening in the back end is banks will develop APIs for its products or services and externalize them to a partner. These are third parties that can use these APIs. So through APIs, banks will pretty much govern the product. For example, banks
Right.
UPI APIs, so for the UPI transactions, which have been provided to a payment aggregator, won't have the check account balance API, but banks
Right.
who have like ready-made APIs, they kind of like offer it to only a few PSP apps, right? So we do not expect
Right.
banks to make like all the banks to have a ready-made APIs for you. Few banks do it. They have done substantial investment in developing these APIs for third parties, but few have not. Plus, few banks are flexible and few are rigid for any customization. So it kind of depends. But uh, like all in all, what I'm trying to say is banks are the ones who are developing these APIs, or they work with some other external source, external parties to develop these APIs for them. But
Right.
ultimately, the third parties, the fintech players, the API service providers, they consume these APIs and launch some products. So as usual, there are multiple ways one can go about it. A merchant can integrate with the bank UPI directly, uh, but efforts will increase. The merchant wants to reduce the efforts, and if he wants to do it with multiple banks, they have to like the efforts substantially increases as well. So
Right.
alternatively, what a merchant can do is they can use a payment aggregator or a third-party service provider's API who is
Right.
helping, who's already been reached out to multiple of these banks, taken those APIs, consumed them, and provided kind of a repurposed API which other merchants can easily consume, right? So
Right.
those can be integrated directly onto the platform which the merchant wants to integrate with the multiple banks. So ultimately, the merchant is getting connected to various banks or multiple of banks without too much of a hassle. They just reach out to one third-party service provider who's providing the
Right.
APIs and done. So that's that's how the like banking as a service kind of works in a very broad level, broad overview. The
Right.
merchant or corporate knows its customers better, vendors, partners, anyone over there. So definitely they can do a better job in selling banking products to them rather than banks doing it themselves. And again, they can choose to do this explicitly by like issuing co-branded cards, credit cards you're seeing these days, or implicitly like let's say there's a B2B payment aggregator which settles the payments for a merchant, so they can extend a line of credit also to those vendors, to those businesses, and collect money from next sales proceeds. So they can offer those kind of financial services as well. So to rephrase my earlier statement, that any merchant or any corporate can become a fintech, it's just that the road
Yeah.
to achieve this may vary. How they are achieving it kind of will differ.
Right. Interesting. So I like what I see on the slide. It talks about marketplaces, and I think now we're moving from an environment where it was like a single service, a single commodity, to building marketplaces for customers, and those marketplaces become a one-stop solution for the customer, whether from like the customer, even if it's from a payment marketplace. I think I tend to see marketplaces across financial services suite, which actually opens up a lot of opportunities
Correct.
when we talk about the use case for these open banking APIs, right? So
Correct.
it
They
moves
can
from
open
not
up.
just
Yeah.
Yes, so it moves not just from banking, so not just from payments. It can move to blending. You can have it under wealth. You can have it under insurance. You actually service end-to-end suites, and then when you have that whole, you create a financial service marketplace. So the opportunity doesn't lie at one single service. It can go reach out to plethoras of services. With that, I have this interesting. You talked about payment, consumer payout, sales, and so what do we mean by virtual wallets? So how does that align to this concept?
All right. So, virtual accounts are nothing but shadow accounts. They offer the same capabilities as a usual or a real bank account. However, they do not come with the administrative workload and costs associated with most banks accounts. So the
Wow.
way a typical savings account or current account works, which has a lot
Right.
of admin costs attached to it or other costs attached to it, virtual account
Right.
doesn't come with those costs. So it drastically reduces the need for a real physical account. But yes, there are a lot of use cases that can be catered using a virtual account. Since
Right.
each virtual account is unique, so receiving funds into a specific virtual account makes it easier and faster for businesses to identify who made these transactions. So usually what happens is businesses kind of struggle towards the end of the month to reconcile the transactions. Okay, this money is coming from which account? And usually the bank remarks or those comments are not that sufficient enough to make those reconciliation easier for anyone, and that's
Right.
where these virtual accounts are like come up with a unique identity which can be easily reconciled, auto reconciled also.
Okay.
Furthermore,
Hmm.
um, they can be used as like a wallet, like an interoperable wallet, as you can say, which can suit
Right.
various needs. To
Yeah.
give you an example, let's say you want to have a platform where a merchant comes and transacts on the website, and now for
Hmm.
every refund you have to struggle a lot,
Right.
putting the money back to the account, to the source of
Mhm.
the payment. So why not instead create a virtual account as a wallet for each of your customer as soon as they are onboarded or signs up on the website on your portal. Uh,
Right.
the customer can load money in that virtual account. The money can be used to make any transactions on the website. If there's
Right.
any refund or any kind of like money wants to be like coming back to the customer, it can be refunded to the virtual account itself, and that money can again be used further for future transactions and stuff. So you can use it to kind of create them on the fly, which supports NEFT, RTGS, IMPS transactions. You can build
Right.
logics where the money can move in and out of those VAs. So you can enable a facility for those customers that okay, if you want, you can take that money back to your bank account also.
Okay.
You can create spend capabilities your virtual account. Like you can issue cards,
Mhm.
100 cards, virtual cards, or you can provide a VPA, UPI handle for any of those transactions. So it's up to
Got
the merchant how they
it. Right.
want to use a virtual account. So that is one use case. The third is, as I mentioned, like you can collect and do payment auto reconciliation. So
Mhm.
consider an NBFC who collects EMIs on
Right.
a regular basis. Now, it becomes really difficult for the NBFC to collect payments at the first instance and then do a reconciliation of it. So, why
Right.
not create a virtual account for each of the customer? The customer loads the money in that virtual account, and then you can put an auto triggers to it where the money can flow in from those virtual accounts to your company's virtual account, or and from there you can then trigger it to make payments to vendors, or you can trigger it to make like put that money back to your current account. So you can
Right.
easily and seamlessly you can put those triggers to
Got it.
make the money move from customers VA to your VA, to your virtual account. As I said, you can make payouts also. So from your virtual account, you can make payments to your vendors, suppliers, anyone who is like associated with you. You want to make any other payouts, you can use that virtual account as a like usually like a typical bank account itself. So you can even trigger automations also over it. Like okay, at certain date, a certain time, I want this money to move from my VA to a customer to a vendor's virtual account or to a vendor's bank account. So you can do the transfers as well. And as I said earlier, you can issue cards. You can offer a UPI VPA handles, which kind
Mhm.
of your own customization branding to it, which adds into a new stream of revenue.
Right.
We were talking about stickiness of customers. This will allow the customers to stick to your platform, maybe offer cashbacks over it. Those are the strategies that usually the companies are adopting these days while they're offering these fintech solutions to them.
Got it. Interesting. So, two questions here, just out of curiosity. So, one, from a consumer standpoint, does these virtual accounts become customizable? So, for any person who's taking up this virtual account, can actually customize and personalize it to their customer needs?
Yes. So they have an option to, like for example, using Zwitch APIs, you can create a virtual account as a wallet,
Mhm.
which by which anyone can use it on transactions on the website, or you can use it as a collection tool as well, where the money can move from the customer's virtual account automatically to your primary virtual account, to the customer, to a business's virtual account. So those are the facilities that you can use using virtual accounts. But it kind of varies from case to case and industry to industry also. Uh, Virtual accounts can in fact be used in any industry. It's sector agnostic, industry agnostic. You don't have to think about whether it's applicable for me or not. You just have to think of a use case and you can kind of uh, get the task done via your VAs itself.
Got it. And so the second point is around security. So a lot of the merchants worry about security, worry about data, worry about where there can be incidents of hacking, phishing, etc. So how does that help? I mean, how do you protect that environment?
Yeah. So at least I can say from Swiss perspective, we are ISO 27001 and PSS level 1 compliant. We ensure the highest level of data privacy, security, and regulatory compliance. We try uh, to make sure that the security and the data privacy it should be
Hmm.
topmost part of our checklist, of our task
Right.
list. So, and also these banks also have, and of course, these are REST APIs. They are secure in itself. So, whatever the transactions that are happening via between the merchant and us through the APIs and then us to the banks, it's completely secured in that format.
Right.
So, rest assured, customers need not to worry, merchants need not to worry. The money is safe and secure. It's not with us; it's there with the bank flying. So
Got it.
we don't have to think about security because virtual accounts are most secured accounts you can think of.
Interesting. So, is there any way that we can show our audience by giving them a demo into how this thing works so that they get a real insights into this entire process?
Sure, yes, I can show them a demo around how virtual accounts can be created on the fly, mostly as a wallet, and then I can show them to load like a penny on it, and they can check a balance also whether the penny has been added or not. So
Wow,
let me
that's interesting for me also. Huh? I'll learn something new.
definitely. Let me just quickly share the other screen. One second.
Sure.
Not open. All right. Um, I'm sure my screen is visible. I'll try to zoom in
Yes.
this demo.
Right.
All right, great. So this is just a very basic demo that I have worked on. Put in some basic information: name, mobile number, email ID, the type of account that I'm creating. It's virtual account. With our APIs, you can create savings accounts and current accounts also. We're just covering up virtual accounts over here in this session, and then how you can use it as a wallet or as a collection tool. So let's assume that we are using it as a wallet right now. All I have to do is click on this button, which will trigger the APIs and generate a virtual account number and a VPA on top of it. So virtual account number is like your bank account number that you can think of, which is having a account number and a IFSC code. So the way you have your bank account details shared with anyone, you can share these bank account, this virtual account number or the IFSC code that's been generated. Um, Alternatively, you
Mhm.
can share them the UPI ID also, which is associated with your bank account with this VPA. With this virtual account number. The way you create a UPI ID or any of the UPI apps and link it to your existing bank account, same way it works over here as well. So you create a virtual account with a VPA. Instead of sharing the entire virtual account number, which is quite big and lengthy, you just share the
Right.
virtual VPA address, virtual private address itself. So let's just click on generate this VAN and VPA. So over here you can see it's created a virtual account for me, and these are the details. It's generated by Yes Bank.
Right.
This is my account number, and this is my FSC code, and this is my UPI handle.
Right.
Um, so the two ways to load money in this particular virtual account, either I can put the account number and IFSC code in my net banking portal or any of the UPI apps, or I can use
Mhm.
this UPI handle directly and then load money in it. So what we're gonna do is we'll use this UPI handle to load money. So let me just try doing it. Um, and what I'm doing in the backend is just generating a QR code which will allow me to scan this UPI ID instead of typing it out. So I'm using a UPI app just to scan it, and they add just one rupee in it. Let
Mhm.
me just scan this one. Okay. Uh, okay. So I am paying to myself 1 rupee,
Right.
and seconds. Okay. So the payment is processing from the UPI app, and it's done. Now, if I go and click on update balance, it
Mhm.
will show me the updated balance, the amount I have deposited. I have just deposited 1 rupee, so if I click on update balance, it will show me one rupee as being my updated balance. So if I added
Right.
100 rupees, 100 rupees. If I transact on the website, the money,
Mhm.
let's say if I transact on the website and 20 rupees gets deducted, the updated balance, if you click over here, it will show as
Mhm.
80 rupees instead of 100 rupees.
Got
So
it.
this is how one can create their own virtual accounts as a wallet or as a collection tool. I have created as a wallet over here that can be used to store money. So
Mhm.
yeah,
So it's as easy, right?
it's very simple. It hardly took me less than 1 hour to build this short demo.
Wow. Wow. So talk about ease, talk about access. I mean, this is how simple it is. So people don't have to worry about it, don't feel scared about it. So it is a very seamless process, like how Sadan showed us right now. So that brings us to the end of this session. I would like to take the moment by uh, feeling so excited about this that number one, you can actually get low cost services at the click of few buttons. It's very easy from a customer standpoint, but at the same time it becomes extremely easy for the merchants, for the banks to use these APIs and build products on it and actually service a multitude of suites for their customers, which can actually be personalized to their journey, actually embed into their day-to-day lives, and does not have to be serviced through their own platform, but can be also serviced through any third party platform. It's all about fulfilling the customer's journey. And at the same time, we're taking care of security. They're highly secure. If we look at how Siddhant showed us the process of virtual accounts, how secure they are, what kind of benefits they provide, not just to the customer, but also to the merchants, to the banks. So, all in all, we're bringing the entire, I would say, not just the third party, the end user, the third party provider, even for that matter, the starting point for all these, which is the bank or the financial institution, all into a single ecosystem, which is trying to fulfill the journey of the customer, make their life easy, and also make sure that they're doing this in an easy and a profitable manner. So, thank you so much, Siddhant, for giving these insights. I truly enjoyed the session and I was excited to be a part of it. I hope everybody enjoyed too.
Same here.
Um, yeah. So we look forward for more of these sessions so that we can dwell upon more aspects of embedded finance and more aspects of finding opportunities with open APIs and what they have for us. So thank you everyone for tuning in. This was amazing.
Yes, and if you would like to get connected with us going forward, learn more about Zwitch, what Zwitch APIs are, we can definitely head on to our API documentation. I'll just share the link here, everyone. Yes, so this is in a quick nutshell about what Switch APIs can help businesses do. Open up virtual accounts, current accounts, or savings accounts for their customers on the go. Collect payments from customers seamlessly via UPI, NEFT, IMPS, or RTGS. You can reconcile the incoming payments from multiple customers. You can validate KYC also, like your PAN, your Aadhaar data, and your bank account details also for a customer instantaneously. And there's much more. We are adding APIs almost every month. So stay tuned. You can join. You can sign up on our dashboard, dashboard.swiss.io, Sandbox dashboard. Our API documentation is available on developers.swiss.io. Head over there, read the APIs. We love to hear from you, any product feedback that you have. So feel free to join our Slack community. The link is available here and as well as in our API documentation page. You can join our community as well to stay connected and be updated about any future events that are happening around embedded finance, fintech, or Zwitch. Um, and yes, last but not the least, connect with us on social media, Twitter, uh, LinkedIn, YouTube, @Zwitch.io is our handle. And and definitely we will love to hear a feedback from you. So just drop in a feedback on this URL. So that's it. Thank you so much, and it was lovely interacting with you, Vandika, to get a very different insight on embedded finance from a business or from a strategy standpoint. How banks are kind of envisioning this industry, how merchants and how technology service providers are looking at this industry, the scope of it.
Right.
So thank you so much for sharing those insights with us.
Thank you. It was a pleasure. Thank you.
Great. Thank you so much. Thanks, everyone, and we'll see you soon. Take care.
Take care. Bye bye.